Yep.
Well, hello, Mavericks. Hopefully, you're having a great weekend. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and we are looking at the second week of April. So let's start off with just the news of last week. What happened? We had a nice bounce on Monday, and then we heard from a couple of the Fed governors, especially Fed Governor Brainerd, who has been a real dove on the FOMC. She came out and she threw the hammer down, harder than anyone thought that she would ever do. And the markets definitely didn't like that. So we had some pretty intense selling on Tuesday and Wednesday. The dollar went higher, cryptos all went lower, and we saw bond yields really tick up quite a bit. And you can see biggest pullback in bond prices since March of 2020. So we're talking about, the biggest move in 2 years happened in the bond market. And so that's going to have some reverberations around the markets. It's when something like that happens, there's spider webs tied to everything in the market. And when something like that moves, it pulls and tugs everything along with it. So the dollar goes higher, oil goes lower. We did get some news that a lot of countries are starting to release petroleum from their reserves to flood the market to try to keep the price down until they can get supply ramped up. As far as economic reports go, we had a decent Canadian employment report. Basically, as expected, not a whole lot of movement off of it. So again, the last week's news was really all about interest rates and what the Fed is doing. And one of the things that Brainerd talked about was making a faster reduction of their balance sheet. Now, I really wanted to get into this just for a second in this session. We talk about the term quantitative easing, and some people say, I don't know what that means. So quantitative easing is basically when the government or the Fed increases the money supply. There is a bunch of numbers out there, but most people use what's called M2, and that's the money supply. And one of the triggers or the levers that the Fed has to pull is that they can reduce or expand the money supply. They can make more money out of nothing, and then they can pull it back. And so after COVID, we had $9 trillion was created. It was created by the government bailouts. It was created by the Fed. So $9 billion more went out into the economy, which meant that people were going to spend more. And one of the things we called early on was there's no way this doesn't lead to inflation. It's impossible. It's impossible to increase the money supply by that large of an amount and not have inflation down the road. It was the price to pay. We had to save our economy back in 2020, and we're now paying the price of saving that economy here in 2022 with high inflation. At some point, the Fed has to pull that money back in. And the way they do that is that they let the bonds roll off their balance sheet, is it's called. So the way that the government makes more money, and it's kind of a crazy little thing we do here. The government says we want to create $1 billion more in money. So what they do is they sell $1 billion of bonds. And then again, a bond is an IOU. You're going to give me money today, and I'm going to pay you interest over years. And then at the end of 10 years, I'm going to give you your money back for a 10-year bond. So what happens is the government creates $1 billion, and then the Fed comes over and says, oh, we'll buy those $1 billion of bonds. And so the government now has a debt of $1 billion on their balance sheet, and the Fed has an asset of $1 billion on their balance sheet. And what happens is the government has to pay the Fed interest. So the Fed is collecting interest. Now, one of the things the Fed had been doing was reinvesting that interest in new bonds. They stopped doing that last year. And now at this point, they are now looking at when one of the bonds matures, they're not going to be what's called rolling it over, meaning issuing a new one. They're just going to let that fall off the balance sheet. And the Fed can go in and actually buy bonds back in the market in order to close out their positions. And so that's what they're talking about doing, is they're talking about going out and letting the maturing securities roll off their balance sheet and not replace them. They're no longer reinvesting the interest, and they're actually going to be looking to buy things back. It's going to shrink the money supply, which is not good for financial assets. One of the reasons we've had for a big bull run in financial assets was that there was more money out there to buy financial assets. Now there's going to be less, and so it's causing the market to be very, very shaky, especially when the Fed tells you they're going to be more aggressive. So let's really take a look at what happened last week. As we talked about, we saw equities come down, and international equities came down even more, and crypto got killed. This is a nasty week for crypto. Gold actually went up. That, if you ask me, should gold be up or down in this scenario? In my opinion, it would have been down. Typically, gold does best when the dollar's falling, but it went up. And you saw oil come down as well. So let's take a look at the SPX. We had a pullback, and we pulled back to the 20-day moving average. And so this is where we are. We're at the 20-day moving average, and we're not getting great candles off this. Going into this week, I'm at a coin toss as far as what the market's going to do. I really don't have any good indications. You know, the one thing I can say is we have a rising 20-day moving average, a rising 50-day moving average. That tends to tell me that there is more likely that we go up than down. But when I take a look at the candles, these aren't very convincing candles. Can you shed any more light on this for me?
Hey Rob, I wish I had a better crystal ball here, but I feel like I'm in the same boat here. The way the market looks a lot clearer as we had that rally, late March, even early April. But here we are, and I think markets definitely is trying to seek direction. And at this point, we have some headwinds, which is really the rising the bond yields, and the bonds are falling, and it seems like that has some sort of effect on the markets. But overall, I must say that it's still in this smaller correction pattern. And I totally agree that these candlesticks are not the most convincing ones. But overall, I think where we are right now compared to where we were like a month ago, I think we're in a much better situation where, we were below all the moving averages. There was a lot more headwinds, and it seems like the headwinds are a lot less now as it was. Another thing I noticed that, overall the markets, the economic numbers are still strong. So it seems like once the focus goes away from the yields, and again, very reminiscing from what we saw last year, around the same time, we saw the peak in these bond yields like in mid-April, I believe, mid to late April. It seems like we're kind of seeing the exact same thing. And once that's get out of the way, we probably see the market gets a lift off. So I'm not as bearish on the markets right now as, we were like back in March. I think this is where we might consolidate a little bit. But those moving averages is likely to provide some support. So I think we'll probably have a better clue later this month as we find out where we go next. But we are definitely in this little leading direction here for the short term.
Thanks, Ankit. I'll agree with you. I think the near term looks pretty murky, but I think once we get through this, the markets are still showing more bullishness and bearishness. But I do think we have a week or two of some pretty messy sideways price action. Let's take a look at the foreign currency performance. We talked about how well this was for the dollar. Again, the rising bond yields is really good. It makes American assets more appealing to invest in. So dollar up 1%. Yen has stayed weak. We like yen short. We like euro short. And you can see that those were the worst performing sectors or currencies that last week. I know I had a trade on dollar Swiss franc, made a little bit on it, but euro dollar would have been a much, much better trade. Taking a look at the growth currencies, CAD, Aussie, and Kiwi. Kiwi has been underperforming for a while. And you can see Aussie and CAD, not really anything to get all that excited about. When we take a look at the cryptos, you can see it was just pain all the way around. Solana had a big jump last week, and it basically gave back almost everything this week. So we hadn't been real bullish on the cryptos really over the last week or two. We were more neutral, and they definitely had a move lower here. So let's take a look at the market, where it stands now, with really an eye towards next week. We've already taken a look at the S&P. Let's take a look at the VT. So here is international equities, and you can see they look a little bit weaker. We've got a move down. We actually broke below the 50-period moving average 3 times. We recovered each one of the times, but this is not great price action. You know, you like to get a move down and then a bounce back up. This is just not doing that. If I had to say, would I rather be long U.S. equities or world equities, I would definitely rather be long U.S. equities, showing more relative strength. Let's jump into the crypto basket. And you can see after a big run, we were neutral. We said, hey, you know what? This is just basing here. And you can see on Wednesday, we broke down on that base. We're now between the 20 and 50-day moving averages. They are flattening out. This has all the hallmarks. Like even before this chart, if you ask me, Rob, what are the hallmarks of something going sideways? I'd say flat moving averages that are crisscrossing on top of each other, just like we had for all of February and March. And a price trading between those moving averages with no real clear direction. So that's exactly what we have here on cryptos. So I'm just not very optimistic about cryptos here over the next week or two. I need to see it gather some more momentum and really show some strength before I can even get interested in them. Now let's take a look at the calendar, because the calendar is a big deal this week. We have 3 central bank announcements. 3 central bank announcements. There's a lot of stuff going on. So Tuesday night, we've got RBNZ. That comes out at 10 p.m. Eastern time on Tuesday. Next, we got the Bank of Canada on Wednesday, and we'll be talking about that in the midweek update. They're not supposed to raise rates, but we'll have to see what they say. The Canadian numbers have actually been pretty good, especially their IV PMI number was fantastic 2 weeks ago. Sandwiched in between the ECB and the Bank of Canada, we've got Australia with an employment report. This is the one that I'm the most interested in, even though, again, we usually central bank announcements are such a bigger deal than employment reports. I really like the Aussie. And the Aussie had a nice move off of the RBA meeting last week. It gave some of that move back, but really held in strong. So I'm looking at Aussie definitely for a long here this next week. And then Thursday, we got ECB. And then Friday, we do have Good Friday. So there's only 2 days off an entire year that currency traders get off. That is Christmas and New Year's. So those are the only 2 days that the currency markets are closed. What's going to happen is the markets are going to be open on Friday, but the equity markets are closed, the bond markets are closed, everything else is closed. So really, you need to wrap up your trading by the close of the U.S. session on Thursday. There should not be a ton of movement on that Friday. Again, it would have to be some sort of news that would drive things, because other than that, we're going to have a pretty quiet Friday, in my opinion. So the equity markets, we are looking at consolidation here. We think it's going to be one day up, one day down, and really some messy price action until we get a clearer indication. Big central banks this week, 3 of them. And then Wednesday, I do like that Australian employment report on Wednesday. Let's jump in each currency individually. Let's take a look at where they're going trend-wise and velocity-wise. First one, Bitcoin. So as you can see here, the trend score is a 0. We're between the two, and the velocity score is actually fairly negative. So at this point, I think the cryptos are likely headed lower, especially Bitcoin. Here's Bitcoin Cash that's pulled back even deeper. It is holding above the 50-period moving average. But remember, Bitcoin was in the middle of it. This is things down near the low. And lots of negativity here. So I just think these are going lower. I've been very clear in public that of all the cryptos, Ethereum has been performing the best. Even though it's still been moving lower, it's been performing the best. And you can see here, it's holding around its 20-period moving average, which is much, much better. However, when you take a look at the velocity score, it's still not anything but down. So until these things bottom out, I think you've got to just lay off of the cryptos. And here's Litecoin, the worst one, actually below the 50-period moving average. So Litecoin is the weakest of the 4 cryptos that we look at. Let's switch our track over to Forex. So look, sometimes crypto is tradable, sometimes it's not. And sometimes Forex is tradable, and sometimes it's not. And that's what we're doing with the velocity score is, okay, where is the movement? Where are the massive trends going? And then where is the velocity? I came in on Wednesday to do the midweek for Corey, and my call was a long dollar. I really like the dollar. Now the call was, I like it up to resistance. I said, we're in a channel. We were down here. I thought we were likely to move up to resistance, and here we are. We're at resistance. So at this point, I have to pull back on dollar and say, okay, you need to show me that you're going to break out this time. The dollar is looking decent here. It's looking good, +2 and +3. I mean, right here on where we close the week, there's no question that the dollar was in demand. People were buying the dollar at the end of the week. Likely to continue, but I need to see it clear out. Okay, what do you think about this dollar here? Do you think it's going to break out of this level, or do you think we stay in the channel?
I agree with that. I think as we take a look at the dollar, I know we kind of went from a 0 trend score to a +2, but overall we are still stuck in this sideways trend, and at this point, it's it's kind of debatable here. But I mean, we have made this high back in end of January. We have made this little high in mid March. So it seems like the way that we see the dollar is that it peaks and then it pulls back, and it does peak and it pulls back. So the trend is not as strong as you take a look at the yen that was moving in that direction. So I think expectation-wise, I'm more looking at this and say, well, I think this probably go in the sideways range. So we have this upper band and the lower band. I think we're probably hitting the upper band. So I agree with that. I mean, I'm not really as 100% on the bullish. I mean, this is just the first week where we're seeing gains. But overall, if we look at the trend, trend, I think the trend is not really that strong. So we'll probably continue to trade that range price action.
Thanks, Ankit. And you mentioned that the yen has been very weak, and we have loved yen short. We liked it off this little bear rally. I know a bunch of our traders caught this little move lower. This is just a beautiful, beautiful base that's forming here. We are likely to be in this base for probably until this 20-period moving average comes and puts some pressure on it. I love yen short, and I think yen short, if you see any like 1 or 2 day pop in yen, I think that is your target for the trade this week. But I don't think we're going to get a breakdown of the bottom of this base probably for a week or two. So like short term, all the stuff says yes, yen's a good short, but I think we're going to be going sideways for a little bit more before we can really jump on it. So the question is, can we find a better short out there than yen for this week? I think yen's a great short for this month. I just don't know if it's a great short for this week. Let's find what's moving this week. We look at Swiss franc. The trend is basically right in between the two moving averages. The velocity score is higher at the moment, where we close on Friday. This isn't compelling to me to really look at trade at all. Again, we're trying to find stuff that's moving. Here we have the euro. Let's take a look and see what's been going on with euro here. Low base. We've got a low base. Euro to me looks like the best one. I would love to see a little bit more. Just give me a little bit more. Maybe a bullish candle on Monday and Tuesday, and then a turn down. I really like euro short this week. This is probably my top short, but remember, until the velocity score tells you it's ready to go, it's not ready to go. So this is not ready Sunday, Monday, probably looking at a Tuesday, Wednesday trade. Over here to the pound is low basing as well. The question is, when is it going to break below this 151 on the currency basket? I don't know. But I do know that when it does happen, I want to be short pound. Until then, I'm going to be a spectator. Here we have CAD is high basing to the upside. Now, just like we talked about with both euro and the pound, this thing looks great. The problem is it ready right here, right now? And you can see on Friday, we're closing right at the top of this range. I think we have a little bit more to let this moving average catch up and push it out of the top. So I like CAD long. I'm waiting for some confirmation, but CAD looks really good here. If we take a look at
Hey, Rob, I just want to quickly add to the CAD there. And actually, I was kind of reading up, and it seems like the word on the street is that they're expecting to raise the rates by 50 basis points. And it kind of, makes a little bit sense here as we are running into that event. This week we are seeing some gains in there as well. But I know it doesn't show up on Forex Factory, but just looking at the consensus, it seems like they're expecting for a 50 basis rate hike. And if it does materialize, I think the CAD's going to have a good catalyst to run on. And if they don't, or if they fall short, I think the CAD could also have a bit of a shorter term pullback. So I think it's a good play, especially going into the Bank of Canada. So I just wanted to bring that up, that we might see that aggressive rate hike.
Thanks, Ankit. And CAD is just at the top of my list as far as what I want to buy this week. Here we have Aussie, and Aussie's looking great. We made a new swing high. That's just what we like to see. Let's just keep seeing new swing highs, pullbacks. So we're getting a pullback. I really like this pattern, and we're pulling back to support. To me, the Aussie just needs a green candle on a daily chart. I just need to see a green candle. And to me, this one jumps right to the top saying, okay, it's now ready. Watch the velocity score. You can see right now the velocity score is saying, hey, we're still pulling back. Once it's done pulling back, I like Aussie quite a bit this week. And the good old Kiwi, who has been trying to keep up with the Aussie. And you can see we've high based here. We're closing at the low of the base. Until this can break out of the top of this base, I'm a little suspect of this. And frankly, the fact that it's heading down near the bottom of this base with such speed and velocity, I think we could absolutely break below this base. So I'm looking at Kiwi and saying, you know what? I don't like it on the long side here. I'd much rather go hunt in the Australian dollar and the Canadian dollar. So when we rack and stack them here, we've got Aussie looking the best, yen looking the worst. And in second position on the long side, you've got CAD and dollar, and the other short, euro. And I think everything else you just wait on. I think all the cryptos you just hold your horses on. Pound is going to break that base most likely somewhere in the near future. But until then, I'm just going to be a spectator. As far as what is really showing us velocity, what's going right here, right now? Like on Friday, how did everything close out? And the thing with the most velocity is the dollar. And second is the CAD. So if we take a look at these, so we loved Aussie on the trend, but it's just not showing up on the velocity. So at the first of the week, we have to put Aussie on the shelf and really focus on the other two currencies, the CAD and the dollar on the long side. On the short side, what's moving lower here? Well, Kiwi is the thing with the most momentum to the downside. However, it is in that higher trend. It's an uptrend. I don't love it. So for me, I'm looking at the first downtrend in currency, and that's the yen at a -1. And so to me, dollar yen, CAD yen, those are going to be the pairs you really want to start the week looking at. But ultimately, dollar, CAD, Swiss franc are the bullish trades, and the yen, pound, and the Kiwi are the bearish trades. So let's go ahead and pair some of these things up and take a look at them. The first pair on the top of my list is dollar yen. So this is, again, with an eye looking out towards the first part of next week. I'm going to pull up a daily chart first. And you can see that we are starting to break out of the past little high at 124.30, 124.40. We're breaking out above that. There is nothing past this. And if you go back multiple years, I'm going to go back multiple years here, and you can see we are back to where we were in 2015, and it looks like we're going to break through that. So we do have some resistance up here. But to me, dollar yen has got all the momentum in the world to the upside. So the question is timing. When is the right timing? We want to be taking a look. I'm on an hourly chart here, and I'm looking for pullbacks and bases. So we just made a new swing high, and we're pulling back. I would love to see a pullback to 124.15. Pullback to 124.15 would be great. We may not get it. We want to wait for this confirmation to turn higher. But to me, dollar yen looks like the best right at the first of the week. If you don't want to chase that dollar, then let's talk about the CAD. I'm going to go to a daily chart on the CAD yen, and you can see here, this just looks really beautiful. A high base forming on the daily chart. It looks really nice. It looks really nice here. But the big question is when? When does this thing break out and run? And I think it's going to be this week. I think you've just got to start looking at your time frames and say, okay, well, where's my entry? Where's my entry point on this? Here's a 1 hour chart. You can see we just had a little swing high. We pulled back. We're now see a cross in the moving averages. So this tells me this thing is really close to ready to go. I just need to find my perfect entry point. And at this point, I want to see this pull back just a little bit. Hopefully we get a pull back to maybe this 98.75 area where we had that last little swing high. We had a little bit of consolidation in here. To me, that's the entry point here. So these are the two currency pairs that I really like at the first part of the week. Later in the week, I'm going to be really focusing on Aussie. Ankit, what are you looking at?
Hey, Rob. Well, there's one thing that we do notice here across the board is that we see a bit of a slowdown. We have Aussie, Kiwi. They were actually the best performer in the past couple of months. So we're seeing a bit of a consolidation pattern there, or we see a bit of a losing that momentum. So I think Kiwi CAD is the one I was looking at, just looking at it from just a relative strength and weakness standpoint. If the Kiwi turns out to be weaker off the RBNZ, I think the Kiwi CAD makes a good candidate. Like this thing has done decent, but has some swings. But now we're noticing that it's just right back at the 50-day moving average. So as I see that level, and if it does break that level, we have a little bit more of that downside risk there. So this is just purely basing it on relative strength and weakness. And again, a 4-hour chart, we see it's testing multiple times there. So this is the one that I'll be looking at it outside of those yen crosses. But I do agree. I love the CAD yen, the way it's setting up. It's actually really good. That's where the momentum is. But I do acknowledge that we might see a bit of a consolidation or a slowdown in currencies like Aussie and Kiwi because they've actually done spectacular in the past few weeks. So we're seeing a bit of a consolidation there, and I think we could take advantage of that in the short term. So those are the two things I'm looking at, Rob. I think my really top trade this week is going to be playing the CAD. And again, like I said, if they come up with an aggressive rate hike ahead of the FOMC rate hike, I think that is going to drive some price action there. And on the contrary, if the expectations are built up and it doesn't meet that expectation, we could see that reverse happen as well. So I think it's regardless of what the outcome is, it's going to be a good trading opportunity with the CAD. So I'll be definitely focusing on that primarily this week. Back to you.
Thanks, Ankit. So let's wrap this all up. We think the market is likely to be messy and choppy here. We're talking about equities. We do like dollar and CAD this week on the long side, and we like yen. And I'll agree with Ankit on the Kiwi. The Kiwi, if you're looking for something that's had a nice run lately that's starting to underperform, I think that Kiwi is looking a little bit suspect as well. So that could be a possible short currency as well. Cryptos, they just need more time. They got to bottom out here before we even really look to touch them. So for me, they're on the shelf until we start to get some better price action. This week, we are going to be meeting on Wednesday as usual, and then Thursday, we have the ECB press conference. That's going to be at 8:15 a.m. Eastern Time. So join us for that. We're going to be using that session to trade the ECB press conference live as it happens. Thank you so much for joining us. Everyone have a great weekend, and happy trading, everyone. Goodbye.